Very much, Manoj. Appreciate you joining in and good getting those stock trades from you and then market view as well. Now, time for market laser. And I'm going to put out two charts here, two separate stocks I'm going to talk about. And both are, if you had to kind of club them together, you probably will say that they have exposure to the agri sector, really. Let's start with ITC first up, which will come up on your screen. And this has been the leader, right, for the market, near all-time highs, ITC. For the year, while the Nifty has not done very much, ITC has done very well. It's up 15% in 2023 so far. No mean feat. The question that I'm asking is, are we looking at the first signs of trouble? If we can have the header up. And I think I'll tell you why. You just look at the chart, and I think it should tell you the story. What I've done is I've looked at where ITC is now bumping into significant resistance. So you look at the start point, which is the 18th of October 2021. That is the start point. ITC saw a swing high on that day. Then there was a big correction. So that's the starting point. And then the next touch point is in November of 2022. So it took more than a year for ITC to come back to that same trend line. There were 2 or 3 touch points in that period, October, November 2022, a year later. And now we're in 2023. ITC is once again at that particular trend line. There are two things, right? I mean, so if you look at what happened after October, November 2022, once it hit this trend line, there was a significant price erosion, significant price correction. We are back at that trend line. And the point is, ITC now is sitting on significant gains. You throw in some of the fundamental aspects, etc. as well, which is nervousness around whether we will once again for the third or fourth time have a good monsoon, etc. And this perhaps is something you might want to pay attention to. But I think the primary thing is it is sitting on significant outperformance relative to the rest of the market. So that is point number one. A strong cross above this particular trend line, and if it keeps moving, I think these doubts disperse and we're looking at new fresh moves, and we'll talk about that when that happens. But for now, for 2 or 3 days now, it is bumping into this trend line and falling. The second one is escorts, right? And this is a more clearer proxy to what's happening in the agri space. And here we are, it's again, there we were looking at ITC bumping into a resistance. Here, escorts perhaps is bumping into a bit of a support level. Again, the charts speak for themselves. The low was June 30th, 2022. That is a June market low. It saw a secular move up. After hitting a high, it has been sloping downwards. From the June 30th low, the trend line extended upwards, meets the price on the 9th of February 2023, which is not very far back. And after bumping into that, we have a significant price move up, and now we are bumping into that once again. So, again, this looks poised for a break. Will it break or not, I think is something which we need to watch out for. But if it does break, these things can extend for a little bit. We can extend projections, etc. But we first need a clear confirmation close below this trend line to move forward with a particular view. So ITC and escorts both looking a little shaky. One needs to be a little watchful. I'm not saying that it's done, but these are at important kind of levels from where you could see some price erosion. Deepan is still with us, and I want to get his thoughts on both these names if he has a view. Deepan, over to you. ITC and escorts.
Yeah, Prashant, see, ITC, I get it that, it's reaching a resistance level, and generally I like to be underweight in ITC. Reason being that apart from the tobacco business, all the other businesses, they have gotten scale, but never really have contributed materially to the bottom line. And they are, in compared to the peer group, those businesses have not done as well. So I'd like to be underweight ITC. The tobacco business anyway is very mature and generally has very low single-digit volume growth rate. So that doesn't really appeal to us. Escorts may be interesting, but the stock is very expensive compared to its peer group. And within the auto or the four-wheeler or the agricultural machinery space, preference would be for Mahindra and Mahindra per se. And if there's going to be El Nino, which is most likely for this particular monsoon season, then we need to be a bit cautious about all these agricultural plays, because in the past, whenever monsoons have failed, it does affect the demand for tractors.
Okay, thanks a lot, Dipan, for joining in, and thanks for waiting by as well patiently. Well, the pre-opening rates have settled absolutely flat, but a couple of stocks do deserve mention. Wipro is trending higher post the restructuring announcement that came through. Bank of Baroda on the MSCI inclusion is in the green right now. Blue Star, the management was very confident of a strong growth this year, so that's holding up a tad bit. Paytm, by the way, is now up, 20% in the month of February alone, and the stock is up 45% from its 52-week low of 438. So that continues to be on our radar. But let's get Abhishek in. He has a momentumizer on his list today. Abhishek, go ahead.
Well, Sonia, the momentumizer on the list is HDFC Bank. It has outperformed Nifty both on a weekly basis as well as month-on-month basis. So, a weekly decline in Nifty is around 2.4%, but HDFC Bank has declined a little less than 1%. Monthly decline in Nifty is about 1.5%, but HDFC Bank has declined less than 1%. So, volume data is interesting given the fact that in last 3 days, the average daily trading volume is more than 1100 crores and little under 2,250 crores. The average, however, over the last 1 or 2 weeks is around 900 crores. So the volume is on the higher side when you compare to the historical average. Yesterday's delivery volume was around 47.3%. If you take a look at the stock price, the price is at 1,593 per share. It is trading above the 100 DMA of 1,584.5 per share. Back to you.
Okay, thanks a lot for that. Well, the other space that we're looking at this morning and for the last few days has been the auto sector. Now, remember yesterday, Bajaj Auto was down 5% after the company sources indicated that they could be taking a huge production cut, especially in their export business because of the uncertainties in markets like Nigeria. We'll also talk about what to expect from the auto sales tomorrow. Jay Kale of Elara Capital joins in now. Jay, good morning. Do you think most of the bad news is in the price for Bajaj Auto, or do you see it trend further towards its 52-week lows?
Well, Bajaj Auto had guided during the quarter con call as well that exports will continue to remain weak. There are pressures in the end markets, and that could maybe go up till May, June. So we are just seeing a large part of that kind of unfold. Jan was definitely way below everyone's estimates, and of course that trend continues as per the management's commentary. Bajaj Auto, did well during FY22 in the export side when it reached all-time highs of around 2.5 million volumes. Probably we could see this year being 25% plus down from there. So unless there are any stabilization in the end export markets, and exports is also a driver of margins for Bajaj Auto. So unless we see some stabilization of exports in the end markets, you could see a kind of range-bound movement for Bajaj Auto.
Okay, range-bound movement for Bajaj Auto. You also came out with a very interesting note on the best performers in the auto ancillary business. And you say that as per the Q3 earnings, the forgings component segment reported the strongest numbers, followed by suspension and braking products. And within that, you've given us, in terms of the top 5 firms that did well on the revenue side: Automotive Axles, Igarashi Motors, MotoCorp, Suprajit and Lumax. Out of this lot, from an investor standpoint, which are the stocks that you would buy? Which are the stocks you'd avoid?
So this is a whole universe of listed auto ancillary space that we have, but we don't have all of them under coverage. Within our coverage universe, we have MotoCorp and Tata coverage, and that is expected to do well. And apart from that, we also have a positive rating on SAMIL, as well as Uno Minda, as well as Apollo Tyres. So yes, a large part of these forging companies have outperformed also because they are exposed to the CV segment, which has been doing well for the last quarter or so, and especially in FY23 as a whole as well. So that has been, a kind of a silver lining. Also, suspension and braking, we categorize Automotive Axles as well as Jamna Auto, which are also CV exposed tanks. And that is something also that got benefited because of the high CV growth. And on the margin side as well, we see most of the companies benefiting from the margin expansion because of lower raw materials. And some of that will also trickle down into Q4 with operating leverage benefits expected to kick in with higher production numbers. And also on the export side, on the international business side, energy prices kind of softening should play a kicker for margins going forward, which is what we factored in our numbers in SAM.
Okay, just one follow-up there. Since you're talking about margin expansion, one space that has done very well in that context is tyres, right? You briefly mentioned Apollo Tyres. Seat also had an 80% up move, and now rubber prices have fallen further. This morning, rubber prices are at 2-month lows. Do you see further operating leverage for these companies, and will that lead to, margin expansion, EPS upgrades, and perhaps better stock performance from here? Or do you think all the good news is in the price already?
So we will have some bit of margin expansion also, more so because of lower raw material prices. Companies in their con calls have guided for 3 to 5% lower RM index, prices in Q4 versus Q3. So that should kind of trickle in terms of margins in Q4. However, one needs to watch. They have also been cautious in terms of commentary, in terms of the demand side. On the replacement, Q3 didn't see that great demand. And that should kind of weigh on the operating leverage side of it. But overall, on a margin expansion side, yes, we are factoring in decent bit of margin expansion from Q3 levels also for tire players, and there is still some upside left for many of the tire players.
All right, we'll leave it at that, Jay. Thanks a lot for stopping by and giving us quick comments on the auto sector. Let's just get a couple of stock ideas going now, since it's just about getting ready for market opening. Kush, what would your call be? All right, sorry, Mitesh, what would your call be at 9:10?
I'll go with the buy on HAL, keep a stop below 25.30 and look for targets of 26.50.
Okay, HAL is the stock that Mitesh likes. Let's go to our stock board segment, tell you what's buzzing. Z Entertainment on our list. Vivek is here with more. Vivek.
Well, two important developments. Number one, the NSE circular that had come in, once the company was admitted into the NCLT, now stands withdrawn. So what does it mean as far as Z is concerned? So now Z, which was earlier being excluded from the F&O segment from the May contract series or from the May series, now stands withdrawn. So now Z will continue to remain part of the F&O segment. The second important development is the fact that earlier Z traders would require to put up 100% upfront margin requirement for all fresh derivative contracts that were being traded from Feb 24th onwards. Now, that too stands withdrawn. So two positive developments, and Z is definitely one stock to watch out for on the back of this positive news flow that's coming.
Okay, Vivek, thanks very much. Let's revisit Cipla once again. Ekta is more. Ekta, morning.
Hi, thanks for that. Well, yes, Cipla is going to be in focus because we've managed to access the Form 483 or the observations which were issued to their Pithampur facility. It was inspected from the 6th of Feb to around the 17th of Feb and was issued 8 observations. Now, a couple of the observations do stand out to a couple of the analysts that I did speak to. For example, the field report was not submitted as required in the SOP. Responsibilities and procedures applicable to the quality unit were not fully followed. So this is just a brief in terms of the 8 observations which were, issued to the plant. And the feedback that I'm getting at this point in time is that it's probably going to take them a longer period of time to solve. So that means that Advair generic could probably see a delay. It is one of the key inhaler drugs which is filed from this particular plant. Stock is corrected at around 11% year to date already. Maybe a lot of the bad news could be factored in.
All right, thanks a lot for that, Ekta. Well, we're just heading into the market opening. Less than 20 seconds left. It's going to be a rather flat opening. That's what the SGX is suggesting. Let's not forget the Nifty is down for 7 straight days in a row. And now the Nifty is down almost 4.5% this year. So it's lost quite a bit of ground. Yesterday, we broke the budget day low intraday as well. Let's see if there's any recovery at all. For now, it's very, very quiet. Yes, there's a green tick, but it's not very convincing. Let's see what's leading from the front. Bajaj Auto is seeing a bit of a recovery, and it has company in the form of other auto stocks. M&M, Hero MotoCorp, Tata Motors are all in the green ahead of the auto sales tomorrow. Apart from that, you have steel companies, Tata Steel, JSW Steel, that are in the green as well. Some of the consumption names like Tata Consumer are holding up in the green, but the big gashes are coming on the downside. So let's look at that. The Nifty is now in the red. Adani Enterprises is down almost about 5%, so that knockdown continues over there. Reliance is dragging its feet, and so is ICICI Bank, exerting pressure on the market. Cipla is under pressure. We were talking about that earlier. BPCL as well is down about 1%. SBI, HCL Tech are a couple of other heavyweights that are just languishing a tad bit in the red. So you'd have to say it's a very, very quiet market at the moment. The start is on the quieter side. The advance decline ratio is well in favor of the advances. So in that context, the market breadth is not too bad. The mid-cap index is opened in the green. Would be interesting to see which way things head. Z Entertainment, by the way, is up almost about 5% and Bank of India is also holding up in the green, so keep an eye out on that. But otherwise, you'd have to say very quiet start to trade. There is no conclusive recovery despite positive global cues. So in that context, there is still a lot of caution in the system after 7 straight days of a fall. Let's see which way it goes from here.
Well, that's right, Sonia. Z, clearly, that's the stock of the morning. It's the exclusion of the company from the F&O segment that's withdrawn. Now the May 2023 contracts are reopened and also the margin requirements have been eased. So that explains why the stock is up 5%. There have been some changes of guard at the top. So India Bulls Real Estate, the MD Mehul Johnson has resigned, has been replaced by Sachin Shah. Basically, it means that it's more control in the hands of Embassy. Last few days, the stock had a run. India Bulls Real Estate, I think we should get that up for you on the screen. Not housing finance. Let's get the real estate stock up. I think it's up close to around 15% in the last 10 days or so. So that one should come up for you. Some bit of profit taking being seen out there. Lakshmi Organic as well. Senior leadership change. Let's see whether or not that stock is reacting. NHPC, they've got approvals for the Arunachal Pradesh hydro project. So that has opened up with a gain of close to around 1%. Wipro, post the business restructuring, the initial tick was in the green, was up close to around 0.5%. A couple of late earnings reactions, whether it was Vesuvius or Rain Industries, not moving too much out there. Both those two stocks as flat as can be. And Mastech, they have announced a strategic partnership with Netail. So that one as well should come up for you on the screen. Rain Industries for the time being has bounced off the lows. And Cipla as well. It's reacting to that Pithampur facility. They've got the Form 483 from the US FDA. So that one's down close to around 2.5% despite correcting 11% this year so far. Prashant.
Nigel, broader market breadth, I have to say, is firmly negative. I mean, yesterday it was almost 3:1 declines to one stock which was advancing. And this morning, once again, it's 3:1. Declines to advances. So that's the broader markets for you. Maybe the small cap index will reflect that. Mid caps are flat as well, and the small caps aren't doing very much. Just a few names. I'll go through the gainers list first because it's the shorter one. Bank of India starts about 2.25% higher on decent sized volumes at this stage. There is Bajaj and M&M, which Sonia already alluded to, 2% there. Z we mentioned. Uflex is another one, which is up about 2.5% on volumes. Triveni Turbines is up about 3% or so. RCF is starting about 2% higher as well. But I can go down the list and volumes start to thin out very sharply. Adani Enterprises was down 9% yesterday. It's down another 5%. It's the top volume sort of led loss coming through across the board, 1137. At the number 2 position is Vedanta. In terms of volume led breaks down. So 2 and 3, almost 3%, accelerating, 278 or so on Vedanta. Adani Wilmar is down 5%, Adani Power is down 5%, Adani Ports is down 1.25%. So the cuts on that pack, I started with that Enterprises, that continues. Tube Investments was a big gainer yesterday. That starts 1% lower, a little bit of pullback. Hindalco is down 1%, and Paytm is coming up with about a 2% cut as well at 621. I think PVR lost yesterday. That is down about 1.33% as well. The Nifty is up 15 or 16 points at 17,400.
Just two more pockets that I want to talk about. One is the tire companies, Apollo Tyres, Seat, all in the green. At least Apollo Tyres is. Rubber prices are now at 2-month lows, as Manisha was telling us earlier. So that's another positive for them. And the other is the commercial vehicle companies. Ashok Leyland is well in the green. Tomorrow the numbers come out, and as I was mentioning earlier as well, prices are going to go up from April. So there's a lot of pre-buying in the commercial vehicle space that's expected.
Prashant, just one correction. I think the breadth of the market is good, actually. I think there's a bit of a refresh I think you'll have to do out there because it's firmly in favor of the number of stocks that are advancing. We have 2 stocks that are advancing for 1 stock that's declining. So good news, Prashant.
Oh dear. All right. 2:1 in favor of advances. So
it's a good thing.
It's a good thing. Absolutely, it's a good thing. And the Nifty is also picking up a little bit, right? 30 points now. So at 17,420 or so is where we are at. Is Ajay Srivastava with us? I think Ajay is with us. Ajay Srivastava is Chief Executive Officer at Dimensions Corporate Finance Services. Ajay, great to have you with us here on the program. Thank you very much for your time. Good to see you. Ajay, how are you feeling after all of the price damage we've seen? 7-8 days of not relentless selling, but one way down, right, for the market. How much of the froth is off and how much is left? Are we in a better place now to look for opportunities? Go on.
Good morning. I think nobody would be, who has a long portfolio will be happy, Prashant. That's an honest fact that all of us are pretty long on the portfolio side, but so we're not happy people. But we are fair people to say that this was expected. The market is expensive. Still, a lot of stock continue to be very expensive. And I think you are seeing a normalization of PEs in many stocks, good quality stocks, no doubt about it. So that normalization is happening. Movement of incremental money flows are slowing down as people move to fixed income, realizing that it's equity is a both ways game. You can go up and down. So, all in all, I think it's a very healthy market and it's correcting in the right places. It's going in accordance with the government economic policy. You don't see any correction in the capital goods stock. If you look at it at all in the last 7 days, which is the way the market should move to. So I think, all in all, when you say froth is out, I think perhaps I would say optimism is down.
Okay, optimism is down, but there's also this big narrative, right? Ajay, hi, welcome to the show.
Good morning,
retail
Sonia.
investors, good morning. Retail investors now perhaps prefer other avenues like fixed income. And I remember you telling us a while back that, perhaps fixed income is the place to be. Keep equities on the back burner for now. Is that going to be the case through the course of 2023? Or do you think things are going to turn at some point?
Sonia, life is such that things happen from somewhere you never expect to happen. Who knew Ukraine war would happen at all? It came out of the blue. Who knows something nice will happen out of the blue? And being optimistic, I would say, something nice should happen and surprise us. Maybe inflation goes down. Maybe Ukraine war stops suddenly. There is a ceasefire. Suddenly you'll find the market getting a different kind of traction. Maybe China numbers come out much better. So, people who are long in portfolio are always optimistic something new will come up. Having said that, I think the key here is now more and more to balance your portfolios to become peaceful, get into fixed income. That's one. Number two is, as what he said, Prashant said, frothy stocks, the high PE stocks, whether it is a multiplex companies, whether it is the, you saw what happened to Adani Group, for instance, with a very high PE rate. I think those stocks are suspect, except for the consumer space MNCs, which have a different traction, different investor base altogether. I think rest of the stock, which have high PEs, are still under the cosh at this point of time. And that is where you need to avoid getting in. The price may be down by 30%, but if the P is still north of 30 or 40, I think those stocks are the most suspect to be in. So I would not say carte blanche, we have a bad problem in the market. Capital good, as I said, Sonia, is wonderful. You can keep investing. You should be investing in capital good stocks, there's no doubt about it, for the next couple of years. But rest of stocks, consumers, non-MNC consumer stocks, I think those are the first ones which will keep falling till they come to a P of 2025.
Hi, Ajay. Good morning. Ajay, the banking space delivered very, very good numbers, some of the best ever, but saw the hardest knock or maybe the worst possible correction post their numbers. So it seems the street is pricing in that the best of earnings are behind, which could be the case. But how do you approach some of these stocks post the correction? Would you look to buy some of them?
See, Nigel, the banking stocks are overbought in India for a long time. And that is one of the reasons why they've underdelivered is everybody hoards them, right? Everybody's got stock of ICICI, HDFC, every mutual fund scheme has it, every multi-cap has it, main cap has it. So, so look at the amount of buying and the stock holding of the Indian institutions in the bank. FIs, that's the number one holding. And the fact remains that at the end of the day, they're good quality stocks, but they cannot give you superlative returns. Simple fact, one of the most competitive industries in the country is banking at this point of time. RBI may shield it as much as it wants, but I think the moment the yield factor became a little bit positive, I think the problem with the bank started. And look at where they're growing, retail loans. Any economy in the world will tell you, and the story of banking has always been, when the economy slows down, retail loans get into a problem. We are just seeing the first, not even the first start of the slowdown of the economy in retail. Everybody's built his portfolio. Nationalized banks who have no expertise on retail loans are building up personal loans. So I still believe that for the bank, it's a reverse thing. Indian economy, if it gives the performance, you will find economy stocks doing better than the bank in the best case scenario. In the worst case, of course, you know what happens with these stocks, banking stocks. Nobody wants to buy them. But the problem is, Nigel, overbought, underperforming sector is the problem with the highest possible risk in the economy, if you ask me, is the banking sector today. So therefore, if you have mutual fund, you already have banking. Most people have HDFC, ICICI, whatever they got it. Incremental buying is a problem here, and that is where returns are going to come. If someone wants to buy bulk of banking stocks, and there's no buyer of that kind.
No, got that. And fair point. Ajay, you said CAPEX and infra, right? Now, but where exactly? Many are excited about railway CAPEX, but again, there are stocks which give you exposure? Maybe companies which make rolling stock or some particular component for the railways, or a player like L&T. I don't know. I mean, I don't know if you have any specific thoughts. But here also, right? I mean, L&T arguably is not very expensive relative to its own history, but there are names like Siemens, etc., which are still, I was looking at FY24 earnings expectations. They're still trading at almost 57, 58 times earnings. Pre-COVID, they were trading at, Siemens was trading at 37 times earnings. That's moved up to almost 60 times now. Is this capex, the investment cycle, picking up in such a strong way to justify these kind of multiples here? Your thoughts?
See, I think, Prashant, you have to keep the basket of MNC capital goods stock in one bucket and maybe one odd Indian stock which has been re-rated. And the reason they are high priced is only for 2-3 reasons. One, they're not leveraged. In spite of being capital goods stock, they're not leveraged. There's surplus in the cash. Number two is there's no fresh supply of paper coming. Most of them are owned 75% by the parent, which has strong impetus to support India. Third is they've got large capex plans coming up, so you should see expansion of capacity over a period of time. So I think check the 3 boxes, and the government trying to spend the 10 lakh crore odd, whatever it number is, in the economy. And where it's going to go? It's going to go to a couple of 4-5 companies at the end of the day, because they supply most of the high-end capex goods, whether it's steam locomotive engines, not the steam, sorry, the electric locomotive engines and the transmissions and the signaling systems and so on and so forth. So I think, and for the power stations, etc. So I think you are safely ensconced in those couple of MNC capital goods stock, purely because the supply of paper is very limited, deleveraged players, and their capex plan tells us they should be going on a growth path of 20-25%. Whether it is a 50 is the right one, I do not know the answer, because the supply of paper is so limited that you can't buy bulk in the stocks, and therefore that the moment you start to buy 100,000 shares, you move the price by almost 8 to 10%. Now that's a dilemma for large investor, but I would still say that if there was a sector to buy into in the economy today, that would be the sector, even though it's a higher P, because the growth plans are good. The rest of the economy is struggling because the growth plans are sub, 10%, 8% kind of growth, maximum 15%. Here are companies with a growth plan of 25+%. So relatively speaking, if you want to put the money, where you want to put it should be these places, not where the guy is going to grow at 6% and a P of 25 even. Here at least is going to grow at 20-25% plus on a deleveraged balance sheet. I think it's a great positive. Suit yourself on where your comfort zones are, but you can't ignore them, can you?
Okay, no, you can't. Surely not. You also can't ignore the fall that Adani Group stocks are seeing at the moment. I mean, it's a complete slam dunk over there yet again this morning. Adani Enterprises, Total Gas, Green, Adani Transmission, Wilmar Power, there's just no recovery. In fact, Adani Enterprises is now down over 70% this year. So that continues to be the problem pocket for the market. Just wanted our viewers to take a look at those stocks. Steep falls continue in that entire group. But the one space that has recovered, Ajay, is some of these new age tech companies, right? I mean, I was just looking at the chart of Paytm, 20% up in February, 45% up from the 52-week lows of 430 thereabouts. You think this is a good time to be going all in to some of these names, Paytm, Zomato, Nykaa, or not quite yet?
All in are reserved for the poker table, Sonia. That's the place to go all in because the payoff is immediate, right? And it's in your hand. You know your cards, you know your people across the table. So I would recommend people to want to go all in, go to Vegas, put it on the poker table. You get a better chance of winning. Not against this market, believe me.
Are you saying gambling is a better option now than trading in the stock market?
Did you not say 70% down just now? If you're really going, in a roulette and a red and a black, I think you'll have more odds. On a blackjack, you have more odds than not losing 70%. I guess so. And I keep saying poker is all in, you want to go there. But I think on a serious note, I think, there is a need to be rational about what you expect from this market. And therefore, where you are you a starting investor? Are you an ending investor? Are you over leveraged? Can you sleep well? Tick box all these questions and you'll get some of the answers where to be in this market at this point of time, if you ask me. So, as I said again and again, that peace of mind is more important to investment than any thesis you can understand. If you can sleep well, you have taken the correct risk. This market is risky. It will also reward the people who take risk. Mind you, I'm telling you again today, you can see Adani stock slam dunk, but you can say there are falling knives. You don't know where it's going to end up. But if you're a brave heart, you got to go in and wade in and find some peace because there are physical assets there at the end of the day. Something will happen. Father Time will ensure the fact that all goes end well with the most large groups, and you've seen what happens. And the time to buy is when they are lows. People who buy at highs never make money. So guys, have a brave heart. You want to do all in. You've got so many options in Indian market with all or nothing.
You guys are, I don't know what to make of. As someone who doesn't play poker, I don't know what to say to this or add to this, but good conversation as always, Ajay. Great speaking with you.
Thank you very much.
Very much
You have a good
for
day.
being here on CNBC-TV18. Thank you. I want to highlight two names before we go further and pick up on some corporate conversations. One is Triveni Turbine. Stock's up 8% now. I mean, it started slow, but Triveni now is at a new high, I think new all-time high, if you can have that up. So that's a large move on Triveni Turbine, right? So that's one name which is at a new high. Another name which is at a new low, which is bouncing off all-time lows, is Uflex. I mean, if you can have Uflex up, Uflex is up 7%, but I think yesterday and this morning also it hit new lows. So that, I mean, you know, from different ends of the spectrum, Triveni Turbines making newer highs, Uflex bouncing off an extremely depressed level. Just wanted to put that up. The market on an overall basis isn't doing very much, still about 25-30 points, 17,425. Guys.
Okay, well, that's the market. But since it's very quiet, let's move on now. Narayana Health is the corporate on our radar today. The company's Q3 performance was quite strong. Margin growth was the key highlight, with an improvement both year-on-year and quarter-on-quarter. And it was aided by improving mix and as well as cost efficiency. To discuss occupancy levels in Q4, we're joined by Sandhya J, the Group Financial Officer, Chief Financial Officer at Narayana Health. Sandhya, thanks a lot for joining in on the show. I want to, before talking about the numbers overall, there are 3 new hospitals, right? There's the SRCC in Mumbai, Gurugram and Dharamshila, as well as, the growth has been pretty good this time. Revenues have gone up 17%. Mumbai has almost broken even. I just want to understand that for these 3 new hospitals, will things get better from here? And in terms of a timeline, when do you think the margins for these can reach double digits? I think it's around 7.5% now.
Good morning. Thank you for inviting me here. Sure. Answering on I think I'll start with the new hospitals. We have been able to bring a reasonable turnaround in the hospitals, especially the 2 hospitals in Delhi have reasonably turned around. Dharamshila is already double-digit. Gurugram is already there. So we believe that the Delhi cluster, the 2 new hospitals in Delhi, will be double-digit next year. Mumbai is close to break-even. It will take little more time. I want to take a little, 30 seconds and explain the Mumbai model. The Mumbai model is a extremely unique model where we've invested the best of the equipments, we have the best of the doctors coming in, and a significant patient load that we treat are people that come from underprivileged backgrounds. So we keep that balance of paying patients and patients who come from underprivileged background. It's a children's hospital, so it saves the lives of so many children who otherwise would not have had access to that care. So it's a very difficult and unique model to crack. It's not like-to-like comparable to other children's hospitals, but we are very proud of the work that gets done in our SRCC Children's Hospital, and we are sure that we will be able to turn it around. It'll be a little more slower than what you would normally expect, but we are sure we'll be able to turn it around. Maybe we need more than maybe a year or so. We need to be able to get to better margin profile than what we are able to report now.
Okay, so it'll take a year or so. I'm sure you are very proud, and I must say that even I'm very proud of the work that's being done at the SRCC Children's Hospital. Unfortunately, I had to visit that hospital as well last year for my own child, and it's exceptional the way, things are progressing there and the work that you folks are doing. But I just want to understand overall, what are the current occupancies that Narayana is seeing, and what are the footfalls tracking at? What do you think you could end the year with?
Sure. So this quarter 3 is supposed to be, a little bit of a lean quarter, but we were tracking total footfall of about 630,000 patients in quarter 3. And Q4 normally recovers from Q3. So we are hoping that Q4 will be better than Q3 in terms of footfall. As far as the occupancy is concerned, we've always said that occupancy is not the right measure to look at, because a lot of the work that happens in the hospital happens during the day, happens outside of the beds, and happens, and occupancy looks at midnight. If a patient has, it looks at midnight occupancy. So it's not the right measure, but I think it gives an indication. So we, at a midnight occupancy level, we'll be about 60%. We swing 3-4% this way, that way, depending on the seasonality, etc. And we believe that we will be able to maintain and grow this occupancy going into Q4 and the year. So at the moment, the demand flow is healthy.
All right. Hi, Sandhya. Good morning. And, good to hear about the focus on SRC. See, I haven't visited the hospital, but, during COVID, I reached out to the staff out there and they were very, very helpful on the phone line. So good on you. Unfortunately, we track the stock market. So we need a couple of numbers then on business as well. So let's focus on that. International patients as a percentage of your total business, how much is it? Has it returned back to pre-COVID levels? And what's the growth trajectory you're looking at from here on, Sandhya?
Sure. So international patients for Q3 was about 7.6%. It has been in that trajectory for 2-3 quarters now, and I think it'll continue in that range. I'm not sure if we will return to pre-COVID levels of international patients, because we've spoken about it in our investor calls and our earlier interactions as well, that there is a certain chunk of business that we have stopped doing, which comes through the referral stream of international patients. So we have stopped doing that. Because of that, that piece of business is not going to return, but we are seeing a steady flow of our regular international patients who keep coming. So in this range, we believe we will be 7.5 up, plus or minus. That is the range of international patients, and I think that will hold steady. The growth, because the overall top line is growing and the international patients are also growing, so the percentage will hold steady, but we will grow on the international patient side as well.
Okay. Can you tell us, for the next 1 to 2 years, what do you plan to do with the cash on the books? I think you're sitting with around 560 odd crores. And out of the guided capex of 1,000 crores, you've spent about 700 crores already. What is the plan henceforth?
So we've guided the capex of 1,000 crores for this year as well as next year. So we will use the 1,000 crores of capex for this year. Of course, the payment will happen and capitalization will happen with a lag. So, it will come into the books with a lag, but we will incur the 1,000 crores for this year. And likewise, we will incur the 1,000 crores for next year as well. The big chunk where the capex for next year is going in is there is a certain replacement capex that we will have to spend, which we keep doing every year. There is also an investment happening in Cayman. We've spoken about it before. So that there are two parts to that investment. One is a radiation block, which is going live this quarter, end of this quarter. So that is the first part of the investment. But the second one is the 50-bed hospital that is coming up in the Cayman Bay area. So that investment will pick up, and that we propose to complete sometime next year. So there is a significant investment that is going into that. And thirdly, we have, as we have stated, that we would like to build in Bangalore, Calcutta. So we will do a greenfield in Calcutta, where we will buy land and build. And in Bangalore, we have land within our city campus itself, so we will build. So there is that chunk going. And then we are also doing capacity expansions across our hospitals. So we are adding onco blocks, we are adding BMT beds, we are adding various types of capacities that help improve the occupancy within the existing facility. So there is a lot of work happening on that. So there is a chunk of capital allocated to that. In all, about 1,000 crores we will spend next year also.
All right, Sandhya, great speaking with you. Thank you very much for your time. And appreciate you joining in on the program today. Thank you, indeed. All right, the market is, up 38, 39 odd points with 17,429. A few other names which have come back into the mix now are, I mentioned Triveni and Uflex. Both are the top volume-led gainers. By the way, Across the market, they're at number 3 and number 4 position in terms of volume-led moves today. Then there is KPIT, which has come back into the mix now, 3% higher, 842. GNA Axles is up 4%. If you can have these names up, KPIT and GNA. Then there is Data Patterns, which saw some price erosion recently. That's up about 3%. New India Assurance, the general insurance government company, 3%, 3.25% higher. JBM Auto is up another 3%. So, throw in the GNA there, maybe some action in these smaller auto anch names. Mastec is up 3%, Prestige is up 2.25%, and so it goes. But, volumes thin out at the lower end of the market. 45 points in the Nifty. We have Vikash Kumar Jain of CLSA join in on the other side. We talked to him about how he's seeing things and whether there is a decisive move either way.